The shares of insurance behemoth LIC are struggling at record low with the sell-off extending for a sixth straight session. And if you look at the share price, well, it is somewhere around 20% below its IPO price of 949 rupees a piece. And if you look at the market cap, well, that has also plunged below that 4.8 lakh crore rupee mark. Going forward, it looks like we may expect more selling to come into the counter, given the fact that the anchor locking period for LIC ends in the middle of June. Another thing that has led to a fair bit of selling in the stock is the tepid fourth quarter performance that we saw from the insurance behemoth, and the dividend payout also fell short of market expectations. If you look at what experts are saying about the sell-off that we have witnessed in the shares of LIC, well, they believe that India's life insurance sector is highly underpenetrated, and LIC being the largest insurer of the country, well, it is well positioned to capitalize on this enormous growth story. Besides, LIC also enjoys a multitude of advantages given its strong brand value, its wide network of agents, as well as its strong distribution network. And given the fact that the valuations are also reasonable, that is what some experts are saying, it seems like a good time to buy on dips for a long-term investor. If you remember, even during the listing, a lot of experts had said that LIC is not a play on the listing pop, so you may not expect very strong returns in the short term. So in case you're a short-term investor and you're looking to make profits in the short term, LIC is not the counter for you, and you should look at selling on every rise. And if you are a long-term investor with a high risk appetite, you should look at staying put in the counter or buying more shares on dips. Coming to what the brokerages are saying about LIC, well, Choice Broking believes that a good strategy for LIC will be to sell on every rise. And when it comes to MK Global, well, it had initiated a hold coverage on LIC and had pegged a target of 875 rupees on this stock. But it believes that most of the growth is already priced in for LIC. It also believes that LIC stands a risk of losing out market share to private players, and the key risks emerging would be its size, its domination in the industry, as well as its legacy. So the verdict is split. If you are a short-term investor, you should look at selling on every rise. But if you are a long-term investor and you missed out on LIC during the IPO, then it is a good time to buy the shares on dips, and that is what experts are saying when it comes to LIC.